Welcome to Hard Energy and Stratas Advisors What's Affecting Oil Prices for the week of July 25th, 2016.
Prior to the beginning of last week, we forecasted that the price of Brent crude had more downside than upside risk and would trade towards $45.50. Our forecast aligned closely with the actual price movement, with the price of Brent crude finishing the week at $45.69. For the upcoming week, we're expecting that the price of Brent crude will continue to be under pressure and will break below $45. We're also forecasting that the Brent WTI differential will trade between $1 and $2 with respect to the September contract. The following is the rationale for our forecast. While geopolitical risks are not going away, the market has absorbed the most recent headline events, and therefore we are shifting our view that geopolitics will be a positive factor to a neutral factor. We are forecasting that the U.S. dollar will continue to strengthen with support from the bullish view of currency traders. As such, we are maintaining our view that the U.S. dollar will be a negative factor. The oil traders are becoming more bearish. Since the beginning of June, the number of short positions have increased by 164%. A similar pattern applies to the traders of Brent crude. Therefore, we are shifting our view that the behavior of oil traders is a neutral factor to a negative factor. Stabilizing U.S. production, combined with robust production from OPEC, is resulting in more than sufficient supply for the market. Therefore, we are maintaining our view that supply will be a negative factor. Evidence continues to appear that demand growth is lagging. Since the beginning of May, gasoline demand in the U.S. has been running about 3% greater in comparison with last year, but only 1.3% since the end of June. Furthermore, during the prior week, gasoline inventories increased in the U.S., Europe, and Asia. Additionally, inventories of middle distillates remain elevated. As such, we are maintaining our view that demand will be a negative factor. Refining margins are being affected by the narrow gasoline and diesel crack spreads. With the current inventory situation, we expect that this will remain the case during the upcoming week. This will moderate crude oil inputs to refineries. Therefore, we are maintaining our view that refining margins will be a negative factor.
This weekly report is an excerpt from our short-term price outlook service analysis. For more information, please contact us.